Hello and welcome to Mortgage Myth Monday. My name is Adam Litzinger, an MLS number 472556. I'm a mortgage lender here at Central National Bank, and I'm here to give you the scoop on the myth that every lender is the same. Not that I'm a bit biased, but I do not believe every mortgage lender is the same. The basics may be similar to one another, but each and every mortgage lender will have their own set rules and regulations that they have to abide by. These are usually set internally by the lender and also externally using a financial service corporation like Freddie Mac, Fannie Mae, FHA, VA, as well as the USDA. You can come across mortgages offered by mortgage brokers, banks, credit unions. Each of those lenders have its pluses and minuses, but you should be asking several questions to each lender. This will better help you to determine which is the best for you. Some common topics to talk about, obviously interest rate, closing cost, and their fees, fixed rate mortgages against adjustable mortgages, penalties, or even servicing rights. They're just to name a few. The Consumer Protection Bureau was founded in July of 2011 after the collapse of the U.S. housing bubble back in 2008. This collapse was mostly due to dishonest banks making subprime mortgages to borrowers who may not have been able to qualify for a traditional mortgage. These mortgages consisted of higher interest rates, adjustable rate mortgages, or even balloon payment mortgages. This was a risk to borrowers due to higher than normal monthly payments, but also the decline in home prices led many homeowners into default or even foreclosure. The government bailout of 2008 was backed by the U.S. Secretary of Treasury, which helped many lenders with the bad mortgages. This did not help many homeowners at that time, but in early 2009, a program called HARP, which stands for Home Affordable Refinance Program, was made available to homeowners affected by these subprime lenders to help refinance the property at a lower interest rate. Unfortunately, the crisis still caused many homeowners to lose their home. Interest rates, like I said, disclosure points, fees, and penalties are often differ between mortgage brokers, whether there's banks and credit unions. Depending on your credit scores and down payment, the term of the mortgage and what mortgage loan type you are looking for, these items can and will vary. The Consumer Financial Protection Bureau recommends shopping at least 3 lenders to compare offers to see which mortgage is the best for you and your family based upon these 4 characteristics. Each lender will most likely pull your credit report in order to offer you a mortgage. Despite what you have heard in the past, having your credit report pulled for the same purpose within a reasonable amount of time will not have a negative impact on your credit. So please make sure you shop around for your mortgage with at least 3 reputable lenders. Some mortgage loan programs will have income limits as well as particular requirements. The lender you speak with should be able to answer all of these questions and give you the best option suitable to you and your family's needs. Don't feel pressured into a mortgage loan just because your lender said it's the only one that you qualify for. Shopping around to different lenders will give you the options to you to make a well-informed decision. Whenever you are speaking with your lender, not only are you asking about the interest rates and fees, but you need to ask about servicing rights. Servicing rights relates to who you will be making your mortgage payments to. Most lenders do sell mortgages off to the bigger banks after closing, but there's still a handful of mortgage lenders that will actually service the loan after closing. That means that your loan will stay with that particular lender and they will handle all of your monthly payments as well as your escrow account. It is in the lender's best interest to have you pay your taxes and insurance to them on a monthly basis. These funds are then put into an escrow account, and when taxes and insurance come due, they are paid out immediately. One less thing for you to worry about. Some lenders do offer mortgage designed for first-time home buyers. This can be a mortgage with little to no down payment requirement in conjunction with a first-time home buyer grant program offered by various entities. These first-time home buyer grants are helpful to borrowers that have limited access to funds for a down payment, and they will generally have requirements that the borrower needs to meet. These requirements are usually first-time home buyer, meaning you have not owned a property in the last 3 years, and will have restrictions on household income. First-time homebuyer grants are considered free money and are usually forgiven after a set period of time, generally 5 years of owning the property as your primary residence. Again, it's wise to ask your lender about the pros and the cons and what the requirements are before using these grant funds. Thank you for your time, and I hope that I've given you more information on why each lender is not the same. If you feel you would like more information, please do not hesitate to contact your local lender at Central National Bank or visit our website at centralnational.com/mortgages.